Hi guys, welcome to another episode of The Aspiring Entrepreneur. I'm your host Hamza Chowdhury. Welcome to our daily stock recap for Wednesday, February 3rd, 2021. It's kind of an exciting day. I felt like the market's heavy. It seems like it wants to sell off. I mean, we just traded at all-time highs, and a lot of stocks aren't really going anywhere. And so a lot of the tech stocks, at least, that were trading at recent highs have been kind of flat the last couple trading sessions. To kick things off, basically in this video, we go through the stocks that we cover in our Sunday channel, Sunday night update, which is Apple, Tesla, Palantir, GameStop, AMC, and I will go through a couple extra stocks for you guys today as well, just for some educational purposes only. So with Apple, I've really seen this sort of resistance, 136, 130, I call it 135.90, 136. And, the key level here the last few sessions has been 133.50. So if we break 133.50, we can definitely see a retest of 130. And, we've been watching closely this 50-day average here, which is shown in this sort of yellow line. And if you're new to the video, the way I sort of identify key support levels is, the thin line is sort of a dab play where if we're adding shares, we add just a few shares or, a portion, a quarter portion, or whatever that size may be. And the thicker green lines are what I consider stronger supports, or lines where I would add, we can go a little heavier. And so for Apple, we can see that there's the Bollinger Band now. It's we're off the upper band, so we're not bullish. We were trading briefly underneath the 20-day average, which is shown with this dotted line. And now we're closing, it looks like right above it, which still indicates a bullish momentum. As this channel sort of closes in, I can see us trading in a certain tight range. I would like to see 127.50 be the ultimate buy zone, but we may not get there. We may end up validating 130. And so if we don't break 130 and we do get another validation, that could end up being the next buy for Apple for the next leg up back into the 140s. And keep in mind, a lot of the price upgrades are up in the 150s, 160s, and so on. And so Apple did a great thing. Just if you think about it mentally, the stock feels cheap, right, when it's trading at 110, 120, 130. It didn't feel cheap when, if you take the post-split, the pre-split price, that would be a $500 stock, right, because it was a 4-time split. So if you have, for example, 130 times 4, that's going to be $520 stock. So, 136 doesn't sound expensive for Apple, but really it's actually gone up quite significantly. And if you don't believe me, you can always go back. I believe it was during the crash in March. It was trading as low as, it's back here in March, and it was trading as low as like 50, 60 bucks. Okay, so you've actually pretty much doubled your money in less than a year. Okay, so with Apple, key levels again is the resistance. We need to break 136, and then I can see us getting right back up here, right under 140. And like I said, if we can't and we break down below 133, I can see a retest of 130, which would then, like I said, line up nicely probably with our 50-day. So we'll continue to watch that. Didn't trade Apple today personally. Didn't trade Tesla at all either. But like we said, Tesla's had a solid sort of retrace. So we had our earnings, same thing. We expected it to kind of come back into the 700s. And then, a couple weeks ago, we identified a sort of a soft dab play that we can add shares at 775, and we got 780. And I mentioned how I was buying shares around 795 for quick scalp plays for 4 to 5 points. And then, today, and yesterday we identified this resistance level at 880, which was a lot of, previous resistance, but it was also acting as support. And so that we broke down from that today. So clearly the 880 is the resistance. So if you're a breakout trader, that's where you want to look for, is a break of 880 in order to get the next leg up to most likely this resistance here, which is right under $900. But what I mentioned yesterday's video is that I could see Tesla trading basically between 845 and 880, and that's what we got today. So we had this sort of breakdown, and so again, nothing really that exciting. It's still a very impressive move, and you can see here we're back on the upper half of the Bollinger Band, and we're up trading right above the 20-day, and so it's technically a bullish stock, but I'm bearish on it. I think we've had quite the move with really no sideways action. We've had a little bit up here in the month of January, but I like to see something a little more of a flush so we can really get some more volume as it's sort of been dried up compared to where we were just a few weeks ago. Okay, so with Tesla again, with the RSI, we're not necessarily overbought, but we're more on the overbought side, and you can see that we still are showing some negative momentum. As this flattens out, we can see potentially a next upside, and I expect to see $1,000 this year is probably my price target for Tesla. For Palantir, I did trade Palantir. I mentioned I went heavy yesterday and bought shares back here, and it was extremely in an extreme tight range. In fact, as I'm recording this video, we're actually hitting lows for the session, so it's breaking down, which is great for us, you know, to dip buy. So sold, like I mentioned, I was going to sell on the push to 34, 35. We got about 33, so it wasn't that exciting. And now, you know, definitely looking to reload here. And so you can see that we have our 20-day average lining up perfectly at our 29.50. I doubt we get that today. We're at 31.78, 31.75, so we're still a couple bucks away. But I mentioned again that I would dab play at 32. I would add at 29.50 in my ultimate buy zone, which would be, you know, going super heavy, would be 27.50 for Palantir. And so we had this, you know, great momentum in the morning, and then we had, you know, the sell off, and then again, like I said, it was trading in like a $1.20 range, so it wasn't really that exciting. But definitely, you know, for those of us who've been waiting sort of for, you know, these dip buys, this is a great time to be adding shares. And so anything under 30 is going to be a bonus and a steal. And just keep in mind, we do have those earnings coming up. It was actually announced, I think originally it was the 11th, but it's going to be the 16th of February. So what I hope, you know, is we can validate this sooner, get in, and then let's just go for the ride and retest some of these highs heading into earnings. And like I mentioned before, try to minimize your risk by selling off and cashing out profit if we have a pre-run up to earnings. And then if after earnings, you know, you have a portion of your shares, you can always buy them back if Palantir tends to dip. And when we call it a dip, we say it's between 10 to 15 to 20%. So it's not like a 1 to 2% move. We're looking for like a real sort of move to the downside to pick up those shares that we cashed out. So you can always lock in profit. Like we talk about, you guys work too hard to be giving back profit to the market, to the hedge funds, to all these other guys. And like I said, with the recording of this video, I see that we're now making new lows for the session, which I expected. We obviously have been struggling to really get back into the mid 30s. So it looks like that, you know, about $33 was our high today. So, you know, 33 will be the resistance. And then, like I said, I'd like to see some buying at 29.50. Okay. And yesterday we had about $30.50, but I want to see up here in 29.50 and the ultimate, you know, going heavy at 27. Okay. GameStop, you know, a lot of these brokerages are now starting to let people trade again. And so a lot of these, you know, 100 shares and all this garbage that, you know, these trashy brokerages are allowing, now they're starting to let those go. So you're going to get a lot of these pops. I mean, it's kind of like Kodak, right? You just, any news will just make the stock pop. And, you know, even though it seems like it doesn't trade in a range, you know, 85 to 113, it's still a $28 range, right? So you can see our average true range, you know, went from really just nothing, like $1 to all the way up to like an average of like $70. So as the stock sort of comes down, you know, as expected, it's going to come down and flush a lot of people out. And you can see all of our moving averages are pretty, you know, down at like 50 bucks. And so we're still trading pretty high, and there's a lot of rejection in these candles. So we'll see what the play is, but it's going to come back down as expected. And like I mentioned before, I'm not playing GameStop. To me, it's a gamble play, and I'm not really interested in playing the gamble plays. And AMC, you know, again, same sort of story, as a lot of these restrictions are being lifted. And so what you had was a lot of momentum for both stocks. And if you watch them side by side, take a moment and watch the charts for GameStop and AMC, and you'll find that they're very similar. So the manipulators are essentially the same culprits for the stocks. And so I mentioned yesterday that, you know, we had lost a lot of value between, you know, 14 and 8, and we would retrace some of that. So we got up to right under 10 today. And so, you know, I've been selling $8 puts. I've sold some 10 in the past. And so any price point that you're comfortable with, I encourage you to sell puts on flushes to maximize your value close to the strike price. So for example, if you think that you're okay holding AMC at $8, wait till flushes as close to $8 as you think it's going to hit, and then go ahead and sell some puts and earn that premium. And like I said, I expect that AMC is going to hold the $8, which we have shown in a thick line, and it's been solid. I mean, it's really held pretty well these last few days. Even though we did have a $6 flush, we ended up still closing right around $8, and today we've held $8 pretty well as well. So I'm going to keep that as a solid support, and you know, continue to watch this sort of trade. Couple stocks I do want to talk about. Yesterday I had mentioned in my shorts video that one of the trades that I was sort of interested in was Sava Sciences, which again was a $2 stock, believe it or not, in the summer. And so what was interesting about Sava was, we had this major squeeze, and I talked about how, shorts are constantly trying to cover, and what you really are looking for is this engulfing candle in order to short. And then I mentioned in the video yesterday as well that this is where the trap is, which is right under VWAP. You go ahead and get a long, and you can see that, the long here, the low here was $51.59. So I went long here. And what was amazing was just the momentum, so we're looking for a risk. If you were to go long today, you would basically be looking at this low here as your risk, right? So 51.66. So whatever entry you got, that would be your ultimate stop. And so as soon as pre-market hit, you can see we made this move from 55 all the way to 72. And I'm like, oh, this thing's already moving. And then we had this retracement. And now you can see, guess what? We're still above the fast moving average. We're still trending higher. And so what's the same? It's the same pattern we're seeing over and over again. Shorts are getting squeezed, shorts are getting squeezed. And so you haven't seen this engulfing pattern anywhere today, right? And just take a moment, take a moment and, like I can, just pause and just think, like, where's that engulfing candle? Where's that candle that says, now you see these long wicks, right? So there's some type of rejection of like a price up here at like $85, right? So it's getting all rejected to about here, 82. But where do I go if I'm shorting, right? So you can see it's not failing. And then here, look, right? It failed and came back down, and it crossed the moving average. In this case, we've been just trending higher. So again, if you saw the last summer $2, honestly, please add a comment to this video, because I was staring at this thing for a long time. And I remember when it moved to 8 to 10 to 12, you notice these things, but to go from $30 yesterday, which was right here when the news was halted, $25, and now you're trading at $82. I mean, welcome to the stock market, guys. Last stock I do want to cover, SLS, just a pure short, great short play. Just for you guys who are looking to short these moves. This thing was way overextended. I actually had to purchase some locates, so my broker didn't have these, so I actually had to buy locates, which basically means you pay a premium to locate shares so that you can actually sell them. And so, just again, what you're looking for is just failure. So the pre-market high, post-market high yesterday was 1426. Look what the post-market high was, 1426 today. This was the pre-market. Okay, this is the post-market yesterday. This is the pre-market. So right off the bat, you know what your risk is. It's going to be 1426. And so when you start to notice this candle and this candle, you start to notice that it's going to fail, right? And it's just fading. So it reaches the high, the algos push it to the top, and then they just fade it, right? And they just sell it down. And so that is the play. And what I always like to do is cover, and make sure you always cover in the pre-market, because guess what? Boom. It's going to, get jammed up in the morning. And so what they did is they actually sell it off, sold it all the way down to 1048, and then of course they raised it right back up. And so this, I believe, was $13. So it was like 13.15, and then they just sold it off again. And now you can see it's faded. It's completely under the SMA line. And so you can just see it's just been a fade play. And so imagine something, guys, for you personally as a trade, one trade a day could make your life. It could change your life potentially, right? So let's just assume you got involved, when you saw this rejection. And let's just say you got involved somewhere here, around $11 or $12. Well, we're trading at 9. So in your one-day trade, you've already got 2 points. If you had 100, 200, 500, 1,000 shares, guys, that's, what I mean? That's going to keep that, JOB away. So this could be life-changing for you. So just recognizing that what's your risk, you would not have shorted anything past 1425. You do not want to short a stock that's making new highs, right? We're looking for failure. And so that's exactly what we got. Great fade play. Again, I have other things that I do. Not saying I could have just left an order in and just let it ride. You could totally do that. But I play usually in the morning more aggressively, and then I kind of just watch. And that's what I encourage you guys a lot to do, is just study chart patterns. Videos like this, obviously we talk about price action and strategies, but always the best thing you can do for yourself is just study charts, recharts, and understand what they're doing, and try to think about what they're doing. Okay. And so with that said, guys, it's a $9 stock now. It started with 14. Definitely the longs would be hurting in this game. Okay. So the longs would have been, winners back here. And then of course the shorts take over, and what we call a day 2 move, which is essentially just a fade. So they pump it up and then they fade it off. Okay. With that said, guys, if you have any questions or comments, add them below. I wish you guys always the best of luck, and I'll talk to you guys later. Take care. Bye-bye.